Hello there, this is Chris Coney speaking, and this is a follow-up to some of the Bitcoin price technical analysis I've been doing recently. I was checking the chart today and I just had to do a video on this one. Like I said in my previous few videos, one of my favorite indicators is the Fibonacci retracement. And you can see I've plotted one here just like in my previous videos. Let me get the old receptacle up here. And I've plotted it from the top of this peak here at $317 right down to here, which is 198 something. And the two moving averages you see here, there's a slow one, which is the yellow line, and this faster one, which is the blue line. Now, because this is a one-day chart, every candlestick represents 1 day's worth of trading. And if I put the chart like that, it's about, 6 months worth of data. So I prefer to use this yellow moving average. It's an exponential moving average, and I'll use a 200 period for that one. So it shows 200 days of trading data. And this blue one is a faster moving average. That is a 50 EMA, so 50 days of data. Now that's significant, and I'll get to that in a minute. But I was talking about the Fibonacci retracement lines, and the point of resistance that we broke was this one. Well, actually we broke two. We broke this one, 62.8%. This is where I was talking about it, and I said, what we'd look to see is a close above it, which we did, and then we look to see a test, which we did, and then we've broken the high of the test, and then off we go. We've got this sort of shooting star pattern here, which is looked like this 78% line was going to get rejected, but it sort of coincided with this run up to the $300 mark. And I was thinking $300 is psychologically significant, and you'll see this candle here. It's sort of it's a buyer bar, but the high of that day sits right on the $300 mark, and that was 2 days ago. So this is today here. That's yesterday, and yesterday was when we broke 300. Not only did we break it, the key is that we closed above 300, and that did two things. That broke this 78.6% line, and then also closed above the $300 mark. And now if I put my crosshair there, you'll see that today's low has tested the $300 mark, and now it's running up to the 100% retracement line, which is based on this previous high. So this previous high is $317. And if we look at today's high, what's today's high? Today's high was $319. So the high is above that, as you can see, at $319.60. But at the minute it's been rejected, and we've sort of got this spinning top pattern on the go, where you've got a tail and a head that are roughly the same size. But the body of the candle is a buyer bar nonetheless. So same again, like with all breaking of all resistance, I look for a close above the line. The next candle needs to test it, i.e. not break back down under it, and then you want to break the high of that bar. Now that's all well and good, but there's one glaringly obvious thing to me about this chart, and you'll see that you've got the what I call the faster moving average, the 50 EMA. As long as it's below the 200, I consider that to be technically still a downtrend. So that's one of the technical indicators that I use. And if I scroll back, look, the blue line is consistently below the yellow line, meaning it's in a long-term downtrend. Okay. Again, based on a 200 and a 50 EMA. So this isn't really suitable for short-term trading. It's a long-term trading indicator because it takes a long time to actually confirm a signal. But when it does, it's based on so much data, it's pretty reliable. Now then, the thing here, look, you see where the blue line is about to cross above the 200. This is a golden cross. So if this blue line if the trend goes up, it will pull the blue line up, and the blue line will be above the yellow line, and then it will be technically, officially in an uptrend. However, there's the glaringly obvious problem I see with this is that this run up is so steep, it's now in the territory that we call overextension. So all price is cyclical. You'll see, ups and downs, ups and downs, and ups and downs. Even here you've got little ups and downs, little ups and downs, little ups and downs, little ups and downs. But this is a big up, right? So we're going to have to pull back at some point, and the longer this goes on, the bigger the pullback is going to be. And you'll notice historically, any time you've had a run up, like look at this, look, cyclicity, cycle, cycle, cycle. When we got up to $317 last time, there was a pullback to the 200 moving average. Even that sort of hammer looking candle there tested it, but then that sort of went for a downtrend after that. But you see the point, right? Even on a downtrend, it can't extend away from the moving averages for too long before eventually coming back to it. And that's exactly what's going to happen this time. This overextension is going to, I almost guarantee you, is going to have to pull back down here. Now it might take a few days. Let's assume that this doesn't break above this 100% Fibonacci retracement line. Let's say that that is about the limit of this bull run. Then what would happen is the few days would transpire, and right over here, as the moving averages come up, round about here, the $285-ish mark, that would be where it would retrace to, and then I would look to see it bounce off of the moving averages and then continue up. But it's still going to have this seesawing action on the way up. Now, that's not a guarantee though. I've no idea how much enthusiasm is behind this run. I mean, technically you could keep going up and up and up and up and up, but the longer it goes up, the harder it's going to come down. It just has to. Everything has to balance. And the beauty of Bitcoin is that it's closer to free market economics than Forex and all the other manipulated markets, So there we go. That's my analysis for today. This is a very interesting turn of events. Last thing I'll do is look at the 3-day chart. Oops. Because that gives me more of a year's worth of data, or a bit more. Oh no, let me do the 1 week chart. There we go. So if you look at this, the top of that little grid was the 100% retracement mark. So if it breaks it, it will be the first time it's broken it, well, this year. You see, it's been fairly stable in a sideways move, fairly stable from this perspective compared to this big decline. But you see where that's going, right? But anyway, that's my observations for today. Do with it what you will, and let's see what happens.